Based on the provided price history and forecast for Bitcoin, a bullish strategy appears promising. The recent price action shows a clear upward trend, with several peaks exceeding the previous highs. The forecast also predicts continuous price growth over the next week, reaching targets well above the current market value. This suggests a strong potential for capital appreciation in the short to medium term. Therefore, a long position in Bitcoin is recommended with an entry price around $69,300. A stop loss should be placed at $67,800 to limit potential downside risk, while a target price of $75,500 allows for significant profit potential. This strategy capitalizes on the positive momentum and projected price appreciation of Bitcoin, aiming to capture gains within a relatively short time frame. Given the provided Ethereum price history and forecast, a medium-term investment strategy appears to be the most suitable. The historical price data reveals a general upward trend with fluctuations. The forecast indicates continued growth, suggesting a bullish outlook in the medium term. The current price is situated near the support price of $2,660.31, indicating a potential buying opportunity. Therefore, an investment strategy focused on a long position in Ethereum is recommended. A suitable entry price would be around $2,660, aligning with the support price. The stop loss should be set slightly below the entry price at $2,650 to mitigate potential losses. The target price could be set at $2,940 based on the forecast, allowing for a potential profit of approximately $10. This strategy capitalizes on the expected upward momentum while managing risk through a defined stop loss. Given the provided price information for Ripple, a medium-term investment strategy appears most suitable. The historical price data shows a recent upward trend, with a slight dip in the last few days. Forecast indicates continued upward momentum, suggesting potential for further gains in the coming weeks. While the support price of $0.5484 offers a safety net, the resistance at $0.5871 presents a potential ceiling for this short-term upward movement. Therefore, a long position is recommended. An entry price around $0.525 could be considered, aligning with the recent price action and the forecast. The stop loss should be set below the recent low at $0.503 to limit potential losses. The target price could be set at $0.575, aiming to capture a significant portion of the anticipated upward movement while staying below the resistance level. This strategy allows for potential capital appreciation over a medium-term horizon, taking advantage of the projected price increase while managing risk through a well-defined stop loss. Given the historical price data and the provided forecast for Solana, a medium-term investment strategy appears to be the most suitable approach. The historical prices demonstrate a consistent upward trend, with recent fluctuations indicating a period of consolidation. The forecast predicts further price increases, suggesting that Solana is poised for continued growth. Therefore, an investment strategy with a medium-term perspective is recommended. A long position should be initiated at the entry price of $170, aligning with the current price and the recent consolidation period. The stop loss should be set at $165, slightly below the recent lows, to mitigate potential downside risk. Target price should be set at $190, taking advantage of the forecast predicted price increases and allowing for a reasonable profit margin. This strategy allows for capital appreciation over the medium term, while managing risk through a well-defined stop loss. Based on the provided Cardano data, a medium-term investment strategy appears most suitable. The 2-week price change demonstrates a generally upward trend, with the forecast indicating continued growth. Cardano's current price is hovering near its support level of $0.3948, suggesting a potential buying opportunity. The resistance level of $0.4469 presents a realistic target for price appreciation within the medium-term time frame. Therefore, a long position is recommended. An entry price around $0.3980 would allow for capitalizing on the potential upward movement while minimizing risk. A stop loss at $0.3850 would safeguard against unforeseen price drops. The target price should be set at $0.4350, aiming to capture a significant portion of the anticipated price increase before encountering the resistance level. This strategy allows for a balanced approach, leveraging the positive price momentum while managing risk effectively. Based on the provided SU, coin price data and forecast, a medium-term investment strategy appears most suitable. The historical price shows a fluctuating trend with a general upward bias. Forecast indicates continued upward momentum, suggesting a potential for price appreciation in the coming weeks. Given this outlook, a long position in SU coin is recommended. An ideal entry price would be around $1.95, slightly below the current price, allowing for a margin of safety. The stop loss should be set at $1.85, a significant support level based on historical price action. The target price could be set at $2.40, aligning with the forecast and representing a healthy potential return. This strategy capitalizes on the anticipated upward trend while managing risk through a well-defined stop loss. Filecoin shows a recent upward trend with a slight correction in the past week. Forecast predicts continued upward momentum, suggesting a bullish outlook for the short to medium term. Considering the support price at $3.715 and the resistance at $3.987, a long position seems suitable to capitalize on the potential price increase. An aggressive investment strategy would involve entering a long position at $3.45, which is slightly below the current price and close to the recent support level. This entry point allows for a potential profit margin while mitigating risk. The stop loss should be set at $3.35 to protect against unexpected price drops. The target price could be set at $3.9, aiming to capture a significant portion of the predicted upward movement before reaching the resistance level. Given the price trends and forecast for Theta network, a cautious investment strategy would focus on a short-term approach. While the historical prices show some upward movement, the recent price action suggests a potential pullback. The forecast indicates a slight dip in the coming week, aligning with the support level at $1.113. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $1.19 would be ideal, aligning with the current price and the potential for a downward correction. The stop loss should be set at $1.21 to protect against any unexpected price surge. The target price should be set at $1.10, slightly above the support level, allowing you to take profits before the market potentially rebounds. Given the current price trend of Dogwifhat and its forecast, a cautious investment strategy focusing on the short term would be most suitable. The 2-week price history shows a general downward trend, with the forecast predicting further declines over the next week, while the support price of $2.199 offers a potential floor. The resistance price of $2.409 suggests limited upside potential. Considering these factors, a short position is recommended to capitalize on the anticipated price decrease. To execute this strategy effectively, an entry price of $2.39 could be considered, slightly above the current price and below the resistance level. A stop-loss order should be placed at $2.45 to protect against unexpected price surges. The target price could be set at $2.15, aiming to capture a portion of the predicted decline, while leaving room for potential price fluctuations. This short-term approach allows investors to potentially profit from the anticipated downward movement of Dogwifhat while mitigating risk through a well-defined stop-loss order. Given the price trends and forecast for Stellar, a medium-term investment strategy appears suitable. The historical prices show a recent upward movement, with the current price hovering near its support level of $0.098. The forecast suggests a continued upward trajectory, with prices potentially reaching $0.11 in the coming weeks. This indicates a bullish outlook in the medium term, making a long position the most suitable strategy to capitalize on the anticipated price increase. Therefore, an investment strategy for Stellar could involve entering a long position at the current price of around $0.093. A stop loss could be placed at $0.092 to protect against unexpected price drops. The target price could be set at $0.103, aiming to capture a significant portion of the projected price increase while staying below the resistance level. This strategy allows for potential profit while mitigating risk through a well-defined stop loss. Based on the provided price information for Starknet, a medium-term investment strategy appears most suitable. The historical price data reveals a volatile trend with periods of both upward and downward movement. The recent price increase, reaching a high of $0.413, suggests potential for further growth. However, the forecast price indicates a slight pullback in the coming week, suggesting a possible consolidation phase. This scenario presents an opportunity to enter a long position, with a target price set slightly above the forecast high of $0.42, aiming to capture the potential upward momentum. To mitigate risk, a stop-loss order should be placed below the recent support level of $0.3942. This strategy allows for potential profit if the price continues to rise while limiting potential losses if the price drops below the support level. The medium-term investment perspective aligns with the expected consolidation period, providing ample time for the price to move towards the target price. Given the price trends and forecast for PENDLE, an investment strategy focused on the short to medium term appears promising. The historical price data reveals a fluctuating pattern with an upward bias, supported by the current price hovering near the forecast price and the support level of $4.938. The forecast suggests a potential increase towards $5.83 in the coming weeks, indicating an optimistic outlook for PENDLE. Therefore, a long position is recommended to capitalize on this potential price appreciation. An entry price of $4.95, slightly above the support level, allows for a buffer against immediate price fluctuations. The stop loss should be set at $4.75 to limit potential losses if the price drops unexpectedly. The target price can be set at $5.60, aiming to capture a significant portion of the projected price increase while leaving room for potential further growth. This strategy balances risk and reward, aiming to profit from the bullish sentiment surrounding PENDLE in the short to medium term. Given the price trends and forecast for render, a short-term investment strategy seems appropriate. The historical prices demonstrate a fluctuating pattern, but the recent 2-week price change shows a slight decline, aligning with the forecast indicating a continued downward trend. The support price sits at $4.696, suggesting a potential floor for the price, while the resistance is at $5.059, indicating a ceiling for upward movement. Therefore, a short position is recommended to capitalize on the anticipated price decline. An entry price of $4.85 aligns with the current price in the forecast, while a stop loss at $4.95 helps mitigate potential losses if the price unexpectedly rises. The target price should be set at $4.6, allowing for a reasonable profit margin before reaching the support level. This strategy takes advantage of the short-term bearish outlook for render and aims to capture potential gains from the anticipated price decline. Based on the provided VeChain price information, a cautious investment strategy with a medium-term perspective appears most suitable. The recent price history demonstrates some volatility, with VeChain fluctuating between $0.0204 and $0.0227. While the forecast predicts a slight upward movement, price is still relatively close to its support level of $0.02069. This suggests a potential for consolidation or a sideways movement in the short term. Therefore, a long position could be considered with a conservative entry price around $0.0215, allowing for some room for price fluctuation. The stop loss should be set at $0.0207 to limit potential losses if the price drops below the support level. The target price could be set at $0.0225, aiming to capitalize on the forecast's upward momentum and potential for price appreciation. This medium-term approach allows for a balance between risk and reward, taking advantage of potential gains while minimizing potential losses. Based on the provided information for Binance Coin, a medium-term investment strategy appears most suitable. The historical price data reveals a general upward trend, although with some recent fluctuations. The forecast suggests continued growth, with prices potentially reaching $615 in the coming week. This indicates a bullish outlook for Binance Coin in the short to medium term. Therefore, an investment strategy focusing on a long position is recommended. A suitable entry price would be around $592, aligning with the support price and offering a potential entry point at a relatively attractive price. The stop loss should be set slightly below the recent lows at $576 to minimize potential losses. Target price could be set at $610, aiming to capitalize on the forecasted price increase while allowing for some room for potential price fluctuations. This medium-term strategy balances risk and reward, aiming to profit from the anticipated upward momentum of Binance Coin while mitigating potential downsides. Based on the provided information for Conflux, a medium-term investment strategy appears to be the most suitable approach. The historical price data shows a fluctuating trend with some upward momentum, while the forecast suggests a slight upward movement in the coming week, reaching a potential high around $0.154. It's crucial to consider the support level at $0.14. This indicates a potential for consolidation or a minor pullback before any significant upward surge. Therefore, a long position with a strategic entry price around $0.142 would allow you to capitalize on the potential upward movement while mitigating risk. Setting a stop loss at $0.138 protects against a sudden drop below the support level. The target price should be set around $0.155, aiming to capture a substantial portion of the anticipated price increase. This medium-term approach allows you to benefit from the potential upside while managing risk effectively within a time frame that aligns with the forecast and price trends. Given the price trends and forecast for Worldcoin, a cautious investment strategy would focus on a short-term approach to capitalize on potential price fluctuations. The historical prices show a slight upward trend, but the recent price drop suggests potential volatility. The forecast indicates a slight decline in the coming week, with prices potentially reaching near the support level. This suggests a cautious approach, potentially entering a short position to profit from the anticipated dip. An entry price of $1.89 would allow you to capitalize on the predicted price decline, while a stop loss at $1.95 would limit potential losses if the price unexpectedly rebounds. The target price could be set at $1.78, aiming to capture the potential drop towards the support level. This strategy prioritizes risk management by setting a stop loss and focusing on a short-term time frame to minimize exposure to prolonged market downturns. Given the 2-week price change and 1-week forecast for Avalanche, a medium-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend, with recent peaks near $27 and a dip towards $22. However, the forecast projects a steady upward movement, suggesting potential for Avalanche to reach $28 within the next week. Therefore, an aggressive medium-term strategy would involve taking a long position at the entry price of $25, a stop loss at $24.79, close to the identified support price, would mitigate risk. The target price should be set at $27, aiming to capture the projected price increase within the medium-term time frame. This strategy capitalizes on the potential for Avalanche to climb towards its resistance level, while managing risk through a well-defined stop loss. Based on the provided price information for Jupiter, a medium-term investment strategy appears to be the most suitable approach. The historical price data shows a period of consolidation followed by a recent upward trend, aligning with the bullish forecast for the coming weeks. The current price is near the support level, indicating potential for further upward movement. Therefore, a long position in Jupiter is recommended. An ideal entry price would be around $0.965, slightly above the recent support level. The stop loss should be set at $0.935 to protect against potential downside risks. The target price could be set at $1.10, aligning with the forecast and the resistance level. This strategy allows for capitalizing on the anticipated upward momentum, while managing risk through a well-defined stop loss. Based on the provided data for EOS, the historical price shows a recent downward trend, with the current price hovering near the support level. The forecast suggests a slight increase in price over the next week, but the upward momentum appears to be weak. Considering this, a short-term investment strategy focusing on a short position appears more suitable. an entry price of $0.435, aligning with the recent low, would allow for potential profit from a price decline towards the support level. A stop loss should be set slightly above the entry price at $0.442 to minimize risk. The target price could be set at $0.415, anticipating a moderate decline based on the forecast. This strategy aims to capitalize on the anticipated weakness in the upward momentum of EOS in the short term. Based on the provided TRON data, a short-term bearish strategy appears most suitable. The historical price data reveals a recent downward trend, with the price hovering near the support level of $0.16. The forecast price suggests further decline, reaching as low as $0.157 over the next week. This aligns with the bearish sentiment indicated by the price action and the forecast. Considering this outlook, a short position on TRON is recommended. An aggressive entry price could be $0.162, capitalizing on the current price being close to the support level. A stop-loss order should be placed at $0.1661, above the immediate resistance level. To limit potential losses, the target price should be set at $0.157, aligning with the lowest forecasted price, allowing for a profit before the market potentially bounces back. This short-term strategy aims to capitalize on the anticipated downward price movement in TRON. CZ's recent price history shows a volatile trend with both upward and downward movements. The current price is relatively close to the support price of $0.3726, suggesting potential for a bounce back. Forecast price indicates a gradual upward trend over the next week, reaching as high as $0.431. Considering this information, a long-term investment strategy appears promising. Therefore, I recommend a long position on CZ. The entry price should be around $0.375, slightly above the support price, allowing for a buffer against immediate price fluctuations. The stop loss should be set at $0.367, the recent low point, to minimize potential losses. The target price could be set at $0.420, a conservative target that aligns with the forecast and offers a reasonable return on investment. This strategy capitalizes on the potential for CZ's price to rise over the long term, while also implementing risk management measures to protect against potential downturns. Given the price trends and forecast for Shiba Inu, a medium-term investment strategy would be suitable. The historical prices show a fluctuating pattern, with recent fluctuations suggesting potential for both upside and downside movement. The forecast indicates a gradual upward trend, with prices potentially reaching $0.000024 in the coming weeks. However, the resistance level at $0.000259 suggests that further significant gains might be limited in the short term. Considering these factors, a long position is recommended for a medium-term investment strategy. An entry price around $0.000186, aligning with the first forecast price, would be suitable. A stop loss at $0.000179, just below the recent support level, would protect against significant downside risk. The target price could be set at $0.000201, aiming to capture a portion of the projected upward movement. This strategy allows for potential gains while managing risk within a medium-term time frame. Based on the provided price data for Dogecoin, a medium-term investment strategy appears to be the most suitable. The historical price data shows a volatile trend with both upward and downward movements. However, the recent price action indicates a potential bullish reversal, with the price breaking above the recent support level of $0.17593 and approaching the resistance level of $0.19693. The forecast also suggests continued upward momentum, with prices projected to reach $0.223 in the coming weeks. Considering this outlook, a long position is recommended for a medium short-term investment horizon. The entry price should be set at $0.185, slightly below the current price, allowing for a small margin of safety. The stop loss should be placed at $0.175, below the recent support level, to limit potential losses. The target price can be set at $0.215, aiming to capture a significant portion of the projected price increase. This strategy balances risk and reward, allowing for potential gains while mitigating potential losses. Hooked Protocol's recent price history shows a fluctuating pattern with a slight downward trend. The forecast predicts further declines in the coming week, suggesting a bearish outlook. Considering the support price at $0.3742 and the resistance price at $0.4117, the potential for significant upward movement appears limited. Given this analysis, a short-term investment strategy focusing on a short position seems appropriate. An aggressive entry price could be around $0.39, aligning with the current price and the potential for further decline. A stop-loss order should be placed at $0.404 to minimize potential losses if the price unexpectedly rebounds. The target price could be set at $0.363, aiming to capitalize on the predicted price drop while leaving room for potential fluctuations. This strategy capitalizes on the bearish short-term outlook for Hooked Protocol, aiming for profits from a decline in price. Based on the provided price data and forecast for Aevo, a short-term investment strategy appears to be the most suitable approach. The historical price data shows a recent downward trend, with the price fluctuating between $0.28 and $0.34. The forecast price suggests a continued downward trajectory, with the predicted lowest price falling below the current support level of $0.3204. This bearish outlook indicates a potential for further price declines in the short term. Therefore, an aggressive short-term investment strategy would involve taking a short position on Aevo. An ideal entry price would be around $0.322, aligning with the recent price action and the forecast. To manage risk, a stop-loss order should be placed at $0.336, slightly above the current price and the immediate resistance level. The target price could be set at $0.304, aiming to capitalize on the anticipated price decline towards the next support level. This strategy capitalizes on the short-term bearish sentiment, while incorporating risk management measures to protect potential losses. Based on the provided price information for Litecoin, a short-term bearish investment strategy appears to be the most suitable approach. The historical price data reveals a downward trend, with recent fluctuations hovering around the support price of $0.005673. The forecast price also suggests a continued decline, with the lowest predicted price being $0.0062. This downward momentum, coupled with the proximity to the support level, indicates a high probability of further price drops. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current price of $0.00651. A stop-loss order should be placed at $0.006625, the nearest resistance level, to limit potential losses in case of an unexpected price surge. The target price for this short position would be $0.005673, the support level, aiming to capitalize on the anticipated price decline. This strategy capitalizes on the short-term bearish outlook for Litecoin, aiming to profit from the expected price drop towards its support level. Sun Coin shows a slight upward trend over the past 2 weeks, but the forecast suggests a continuation of this upward movement. The support price is at $0.01727, indicating a potential floor for the price. The resistance price is at $0.01886, which could act as a ceiling for the price in the short term. Given these factors, a long-term investment strategy appears to be favorable. To execute this strategy, I recommend entering a long position at the current price, around $0.01727. The stop loss should be set slightly below the support price at $0.0170 to minimize potential losses. The target price should be set at $0.01886, aiming to capture the potential upside towards the resistance level. This strategy capitalizes on the bullish outlook for Sun coin while managing risk through a well-defined stop-loss order. Holding the position for a longer period allows for potential growth, as the price potentially breaks through the resistance level and continues its upward trajectory. Based on the provided price information for PEEP, a short-term investment strategy appears to be the most suitable approach. The historical price data reveals a fluctuating trend with recent dips. While the forecast suggests a potential upward movement, the current price is relatively close to the support level of $0.000017. This suggests a higher probability of a short-term correction before a sustained upward trend. Therefore, an aggressive short-term investment strategy would involve taking a short position on PEEP. A suitable entry price would be around $0.000099, aligning with the recent high. The stop loss should be placed at $0.000017, the support level, to minimize potential losses. The target price could be set at $0.000082, a level below the recent lows, aiming to capitalize on the anticipated short-term price decline. TRON coin's recent price history shows a slight upward trend, but the forecast suggests a modest decline over the next week. This indicates a potential short-term bearish outlook. The current price is hovering near the support level of $4.678, which could provide a cushion against further downward movement. However, the resistance level of $5.182 is relatively distant, suggesting limited upside potential in the near term. Given these factors, a short-term short position on TRON coin appears to be the most suitable strategy. An entry price of $4.85, slightly above the current price, allows for a buffer against immediate price fluctuations. The stop loss should be placed at $4.93, aiming to minimize potential losses if the price unexpectedly rises. The target price could be set at $4.68, aligning with the support level and offering a reasonable profit margin within a short time frame. Based on the provided Bitcoin Cash price information, a medium-term investment strategy appears to be most suitable. The 2-week price history demonstrates a volatile pattern with both upward and downward movements, while the forecast indicates a potential upward trend, reaching $401 in the coming week. Price history also suggests periods of consolidation and potential retracements. Therefore, a long position is recommended, aiming to capitalize on the predicted upward momentum. An ideal entry price would be around $360, slightly below the current price and the support level of $360.9. This allows for a buffer against immediate price fluctuations. The stop loss should be set at $350, a level below the recent lows, to minimize potential losses. Target price can be set at $390, aligning with the forecast and providing a reasonable profit margin. This strategy balances risk and reward, allowing for potential gains while mitigating potential losses in the medium term. Based on the provided Chainlink data, including historical prices, forecast prices, support, and resistance levels, a medium-term investment strategy appears most suitable. The historical price data shows a relatively stable price range with occasional upward movements. The forecast suggests continued upward momentum, with prices expected to reach $13 in the coming weeks. This indicates a bullish outlook for Chainlink in the medium term. Therefore, an investment strategy for Chainlink would involve taking a long position with an entry price of $12. The stop loss should be set at $11.8 to protect against any unexpected price drops. The target price should be $13, aiming to capitalize on the predicted price increase. This strategy allows for potential profit from the anticipated upward trend, while mitigating risk through a defined stop loss. Based on the provided Polkadot price data, a short-term investment strategy appears to be the most suitable approach. While the forecast suggests a slight upward movement, the recent price history exhibits volatility, with prices fluctuating around the $4.00 mark. This indicates a potentially choppy market in the near term. Therefore, a short-term long position could be considered. An entry price around $3.96, near the recent lows, would allow for potential gains if the price moves towards the forecast high of $4.20. A stop loss at $3.86 below the recent lows would limit potential losses. The target price could be set at $4.18, aligning with the resistance level and offering a reasonable profit margin. This strategy capitalizes on the potential for a short-term upward move while managing risk effectively. Based on the provided price information for NEAR protocol, a short-term bearish investment strategy appears to be the most prudent approach. The historical price data reveals a downward trend, culminating in a recent dip below the $4.00 mark. Furthermore, the forecast price suggests a continued decline over the next week, with projections reaching as low as $3.90. This downward trajectory, coupled with the proximity of the current price to the support level of $3.926, indicates a high probability of a further price drop. Therefore, a short position on NEAR protocol is recommended. An aggressive entry point would be $4.05, allowing for a small margin above the current price to minimize the risk of an immediate reversal. The stop loss should be set at $4.20, a level slightly above the recent resistance, to protect against any unexpected upward movement. The target price should be set at $3.80, taking advantage of the anticipated decline and providing a reasonable profit margin. This strategy aims to capitalize on the short-term bearish momentum of NEAR protocol, while mitigating potential losses through a well-defined stop loss. Based on the provided price information for stacks, a short-term investment strategy appears to be the most suitable. The historical price data reveals a recent downward trend, with the price oscillating between $1.46 and $1.86 over the past 2 weeks. While the forecast suggests a slight upward movement in the coming week, it remains below the recent resistance level of $1.865. This indicates a potential for a short-term consolidation or correction before any significant upward movement. Therefore, an aggressive short-term investment strategy would involve taking a short position on stacks. The entry price could be set at $1.68, slightly above the current price and close to the recent support level. The stop loss should be placed at $1.72, above the recent high and the forecast peak, to limit potential losses. The target price could be set at $1.598, the support level identified in the price information, aiming to capture a potential decline in price. This strategy capitalizes on the recent downtrend and the limited upward momentum suggested by the forecast, while also incorporating risk management measures to protect potential losses. Based on the provided price information for Aptos, a short-term investment strategy appears to be the most suitable approach. The historical price data reveals a fluctuating trend, with recent price movements suggesting a potential consolidation phase. Forecast price indicates a gradual upward trajectory, but the price is currently close to its resistance level. Therefore, a cautious long position could be considered. An entry price around $9.30, slightly below the current price, would allow for potential profit as the price moves towards the forecast target of $9.65. A stop loss order should be placed at $9.09, the nearest support level, to mitigate potential losses. The target price could be set at $9.84, aligning with the higher end of the forecast and offering a reasonable profit margin. Based on the provided data for Litecoin, the investment strategy suggests a long position with a medium-term perspective. The historical price data shows a slight upward trend, with the recent price hovering around the support price of $69.29. Forecast price indicates a continued upward movement, suggesting potential for capital appreciation. Therefore, an entry price of $69.50 is recommended, slightly above the current support level to allow for potential price fluctuations. The stop loss should be set at $68.50, protecting against a significant price drop. The target price should be set at $73.50, aligning with the resistance price and allowing for a healthy profit margin. This strategy capitalizes on the bullish sentiment indicated by both historical data and the forecast, aiming for a moderate return within a medium-term time frame. Given the price trends and forecast for Uniswap, a medium-term investment strategy appears suitable. The historical prices demonstrate a volatile pattern with both upward and downward movements. However, the forecast indicates a consistent upward trajectory over the next few weeks. The support price sits at $8.146, providing a safety net for potential price dips. The resistance level at $9.318 suggests that there's room for further price appreciation. Therefore, a long position in Uniswap is recommended for a medium-term investment horizon. An ideal entry price would be around $8.30, aligning with the forecast and offering a reasonable margin above the support price. A stop loss could be set at $8.00 to limit potential losses in case of an unexpected market downturn. The target price should be set at $9.20, aiming to capitalize on the projected upward momentum and reach a level close to the resistance price before considering exiting the position. This strategy allows for potential profit while managing risk within a medium-term time frame. Bittensor, as recent price history shows a volatile trend with both upward and downward movements. While the price has experienced a dip in the past 2 weeks, the forecast suggests a potential rebound in the coming week. The support price sits at $463.6, indicating a potential floor for the price, while the resistance price at $525.9 suggests an upper limit to the potential upside. Considering these factors, a medium-term investment strategy with a long position seems appropriate. The entry price should be set at $480, slightly above the current price and below the recent support level. This allows for a margin of safety while still capitalizing on the potential upward movement. The stop loss should be placed at $465, below the support price. To limit potential losses, target price could be set at $515, aligning with the forecast and aiming to capture a significant portion of the potential price increase. This strategy allows for a balance between risk and reward, aiming to profit from the anticipated rebound in Bittensor's price over the medium term. Given the price trends and forecast for Internet Computer, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend over the past 2 weeks, with the current price hovering near the support level of $7.799, while the forecast suggests a potential slight increase in price. The overall trend remains uncertain. Therefore, a short position could be considered to capitalize on the potential for a further price decline. An entry price of $7.80 would allow for a small margin of safety above the support level. The stop loss should be set at $7.90 to limit potential losses if the price unexpectedly rises. The target price could be set at $7.50, aiming to profit from a modest decline towards the next support level. This strategy prioritizes risk management and capital preservation, while seeking to capitalize on short-term price fluctuations. Based on the provided data for Artificial Superintelligence Alliance, a medium-term investment strategy appears most suitable. The 2-week price change shows a volatile trend, but the forecast indicates a consistent upward movement. This suggests a potential for growth in the coming weeks. The historical price data also highlights the support level at $1.358 and the resistance level at $1.463. Given this information, a long position is recommended. An entry price of $1.36, slightly above the support level, allows for a margin of safety while capturing potential upside momentum. The stop loss should be placed at $1.32, below the recent lows, to limit potential losses. The target price can be set at $1.45, aiming to capture a significant portion of the projected price increase before encountering resistance. This strategy balances risk and reward, aiming to capitalize on the positive forecast while mitigating potential downsides. Based on the provided price information for Optimism, a cautious short-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend with recent downward movement, while the forecast indicates a potential slight rebound. The overall trend suggests limited upward momentum. Considering the support price of $1.521 and the resistance price of $1.724, a short position with an entry price around $1.58 could be considered. Setting a stop loss at $1.61 would help mitigate potential losses if the price unexpectedly rises. The target price could be set at $1.48, aiming to capture a portion of the anticipated downward movement. This strategy prioritizes risk management while seeking to capitalize on the short-term bearish sentiment indicated by the price data and forecast. Based on the Ethereum Classic price information provided, a medium-term investment strategy appears most suitable. The historical price data shows a consistent upward trend, with the price hovering around $19. Forecast indicates continued upward momentum, suggesting Ethereum Classic could reach $20 within the next week. The support price of $19.48 provides a safety net, while the resistance at $22.83 suggests there is room for further price appreciation. Therefore, a long position is recommended, with an entry price of $19.20. This allows for a small margin of safety below the current price and the support level. The stop loss should be set at $19.10 to limit potential losses. The target price could be set at $21.50, aiming to capture a significant portion of the anticipated price increase while staying below the resistance level. This strategy allows for a balanced approach, capitalizing on the positive price trends while managing risk effectively. Based on the provided price information for Ethereum name service, a medium-term investment strategy appears promising. The historical price data reveals a generally upward trend, although with some recent fluctuations. The forecast price suggests continued growth over the next week, reaching levels above the current price. This positive outlook, coupled with the support price sitting comfortably above the current level, indicates a favorable environment for a long position. To execute this strategy, an entry price of $16.50 would be suitable, allowing for a slight dip before entering the market. The stop loss should be set at $15.50 to protect against unexpected price drops, while the target price could be set at $19.00, aligning with the resistance level and allowing for potential profit taking. This medium-term approach capitalizes on the anticipated upward momentum while managing risk effectively. Given the price trends and forecast for Solana name service, a cautious investment strategy would focus on a short-term approach. The historical prices show some volatility. With a recent downward trend, the forecast suggests a continued decline in the short term, with the price potentially dropping below the current support level. This indicates a bearish outlook in the short term. A short position is advisable to capitalize on the anticipated decline in prices. For an aggressive short-term investment strategy, an entry price of $0.225 would be ideal, aligning with the forecast and near the current support level. The stop loss should be set at $0.233 to protect against any unexpected price recovery. The target price should be set at $0.215, slightly above the forecasted lowest price, allowing you to take profits before the market potentially finds support. Given the 2-week price change and 1-week forecast for Aave, a bullish investment strategy is recommended. The historical price data reveals a consistent upward trend, with the recent price surge breaking past previous resistance levels. This indicates strong buying pressure and potential for further growth. The forecast further supports this bullish outlook, predicting continued price increases over the coming week. Therefore, a long position in Aave is advised, targeting a price of $195, which aligns with the highest forecast price. The entry price should be set at $174, the most recent price surge, allowing for a potential profit margin. A stop loss at $170.39, the identified support price, is crucial to minimize potential losses if the market experiences a sudden reversal. This strategy capitalizes on the bullish momentum and positive price forecast for Aave, aiming for substantial returns in the short to medium term. Based on the provided Injective price data and forecast, a short-term investment strategy appears most suitable. The historical price shows a slight upward trend, but the recent price action suggests consolidation. The forecast indicates a potential for continued upward movement, reaching prices around $22. This presents an opportunity to enter a long position, aiming to capitalize on the anticipated price increase. An optimal entry price would be around $19, aligning with the current price and the support level. A stop-loss order could be placed at $18, protecting against potential downside risks. The target price should be set at $22, aligning with the forecast and offering a reasonable profit margin. This strategy capitalizes on the short-term bullish momentum while managing risk through a well-defined stop-loss. Based on the provided Polygon price history and forecast, a cautious investment strategy with a medium-term perspective appears most suitable. Price history reveals a fluctuating trend with recent dips, while the forecast suggests a slight upward movement. The current price sits near the support level of $0.3183, indicating potential for a bounce. Therefore, a long position is recommended, aiming to capitalize on the potential price increase towards the resistance level of $0.3652. An entry price of $0.319 would allow for a purchase near the support level, while a stop loss at $0.315 would protect against significant downside movement. The target price should be set at $0.350, aiming to capture a substantial portion of the potential upward movement, while allowing for some buffer before reaching the resistance level.